Okay, so to go back to our trend journal that we do every week, just to start here, I on the 4th we had a huge downside reversal day on April 4th where we had the heaviest displacement and heaviest uh, down day that we've had in a long time. So we broke below the 30-day moving average, so I put the trend to zero for the last few days. We haven't really gone anywhere since then. We've been stuck inside that range. I have noticed that banks are setting up, money management setting up, and there's still a lot of stocks going sideways. Energy, metals, they're still doing really well. Um, then you've seen some laggers like small caps and some mega techs like Apple, Tesla. Those are kind of the laggers lately. They haven't been really going down too much, but they haven't been participating in the rallies that we have had. And so then just to go to Nasdaq here on a daily chart, I'm going to add my moving averages that we use. I use a 30 moving average, a 10 moving average, and a 50 usually. And I don't always have them all up at once. And so right here, this one is the 21, the 50, and the 10. And so notice how we broke below it on the 21-day moving average for the first time in a long time right here on the 4th. And then if you do the 30, which has been even more, we broke below that as well. So that was kind of like a right here. That was the first time below the 30-day moving average since November. And so now it's kind of just gone sideways since this day. We've had 3 inside days in a row. Coming up to CPI tomorrow. So CPI tomorrow, I'm expecting and really hoping, because it's been a low range lately, to get out of this range. So either come to get above this high or get below this low. If we can get below this low, then we'll be looking for this next set of lows down here, which isn't too far, but we could probably continue it down even lower, even to this low here. And so if we do continue lower, I would be looking right around, um, so 100 points below that. So yeah, that would be somewhere right around 17,600, 17,500 for the Nasdaq 100, for the US 100, and that's right around February lows. Not lows, but right around this low on February 21st. One second, my dog's barking at the window. So I'm expecting at least if we come below here, at bare minimum, you're going to take out this low from March 15th. If we continue lower, I would look to come into this fair value gap, either take this low or bounce somewhere inside this fair value gap, depending on where the money go, where how it looks. I mean, that's a 3% drop. We're not going to get that far tomorrow. This is a 2% drop just down to this low, which on a large down day, that's pretty big. We haven't had a 2% drop in over 150 days on the Nasdaq. So, I mean, if we continue lower, we'll probably just take out this low, and that's probably going to be the move for the day. What I'm going to be looking for is to see if we get some sort of displacement above or below. So like if we take out this high and then we can't continue higher, then we'll be looking to go back to the downside. Vice versa, if we take out this low and we doesn't look like it's going to continue lower, then we'll be looking to come back to the upside. But all in all, I want it to at least get out of this range because this range is a pain in the ass. Seasonality wise, we've been talking about this move right here in the Nasdaq. This is the Nasdaq. So this move in the Nasdaq going from about 4% to about 1%. So a 3% drop roughly in the Nasdaq in between the middle of March and the middle of April. So what have we seen here? If we go on our daily chart, we haven't really seen a quote drop, but this range is 3%, just under 3%. It's 3.993%. So in terms of seasonality wise, it didn't look quite like this, but it did have a 3% consolidation over the course of April, March, and April. So that is just something that I'm noting, that this is still kind of playing out as we want. As you see here, we get a little pullback towards the end of March, which we might still see and then base out. And so that's something that I'm still looking into and just watching to see how it reacts with this seasonality trend pattern. So I always am keeping this in a look as well. Same with the Russell 2000 here. This way goes from 3% actually down even more, which we have not seen. The Russell, I've been mentioning this a lot. We are just getting destroyed by this December high. Every time we get above this December high, we get displacement back down right here. December 27th. We get above it, we jump down. Get above it, jump down. We're above it for 2 days. We've been below it for 1, 2, 3, 4, 5, 6 days. So every time we get above it, we're barely able to get above it, and then we keep getting rejected. So I'm gonna be looking tomorrow to see, are we gonna get above it? Notice we're still in the range of Thursday's mother bar, and so if we are gonna play inside that range, I want to get outside of this range. The Russell has been in the same range since April 2nd, so a while now, over a week. 1, 2, 3, 4, 5, 6 days in this same huge range from Tuesday, not even from the Thursday range that Nasdaq has been in. So I want to see how we react to this December highs. If we cannot hold above these, then we're probably going to continue lower and at least take out this box low right here. And that's the low from March 19th. So next, DXY. Last week, we talked about this possible downside reversal on DXY, which we got looking to target that weekly fair value gap here. That's exactly what happened. We came right to it, and we've just been holding through it. Doesn't really look too bullish or bearish at this time. It's just kind of sideways. So we need tomorrow again will be a huge. What is this? Tomorrow is going to be a huge day. Is it which direction is it going to continue? Is it going to bounce off this moving average and shoot to the upside, or is it going to pull back and have displacement to the downside? So just looking to see what way we really continue. UJ, again, the shit range that everything's been in. This is, though, it's still above its 10-day, still above its 30-day, still above its 50-day. Everything's trending to the upside. We have this wonderful upside reversal candle here, and this is one that I've been watching heavy. When you see kind of those shakeouts like that, those swift moves, it undercut a whole ton of data and then came right back and closed these highs. We haven't seen a continuation from it just because we haven't really had too much of a catalyst lately, but it does look like it kind of wants to continue higher just by looking at this. Again, tomorrow will be that whole key. If DXY pushes down to the downside, then it's going to pull this back with it, obviously. This 4 hour just looks jacked. There's almost no trade here. I would watch this fair value gap, but just to see if it has continuation. Because if it doesn't get a back above this fair value gap, then it could at least come down to this bottom of the range here, probably around here. So scalpers might be able to play something like that, but this is just not good until we can get out of this range. Aussie dollar, though, actually has really clean highs to look into right now, and this could be something that could be played as well. If we can get above this midpoint high here from March 4th, the week of March 4th, then and get some good displacement above this high, then we could look to come back up to this high here. If not, if we come back up, if we get above this high and then start rejecting, then I would look to at least come and take out these lows or this low. So Aussie dollar is one that I'm kind of watching because it's been moving a little better than euro. Like if you look right here at the change for the day, Aussie dollar is up 3.37% and the euro is only up 0.2%. GBP is only up 0.18%. So it moves a little quicker and it has a little larger move. So I am kind of watching to see how this is going to react. You're above your 200 EMA, which on the week, on the 4 hour, which hasn't been too much, but it's starting to at least try to curl up. So if we can get above today's highs, then it'll actually hit this high. And then if we can really hold above that high, then we'll go here. Everything depends on what DXY does. And that's what it's going to come down to. And I look at these three, Aussie, Euro, and GBP, kind of just to figure out which one looks the best to trade and which one has the cleanest levels. And right now, I think the Aussie has the cleaner levels of the three, especially on a weekly and a daily chart. Because you can just see this, a 200 EMA, you have a bunch of highs right here. That's very clean. Euro, still 200 EMA here, but you don't have a set of equal highs. You have this one right there, which is not as far. And then GBP actually looks the worst to me, where it took out this high, undercut it with displacement to the below, and has not been able to displace back up to the upside. So this one looks the worst to me versus out of the three. So if we end up going short, I would be looking to short GBP. If we end up going long, I'd be looking to long the AUD. I don't trade them too much. I more just look at them. We went over IWM. Next, for the trades that we're in, or that I have been in, I'm still on Halliburton. This is doing wonderfully. We got in at 38.92. Our stop loss right now is below this candle here. This candle right here. This displacement candle from Wednesday the 3rd. How it created this fair value gap. If it gets below that candle, it'll be below the 10-day moving average, and I'll be looking to get out. Today, great upside reversal, undercut 2 days worth, Friday and Monday's lows, and close at the high of the day. So nothing to do with it. It's up about 100%, just chilling. I don't necessarily like the volume too much of these last few days, but we'll see if we can get some good volume tomorrow. We have earnings on the 23rd, so I'll probably close before then. Mara, I did take a loss in. We were looking to we got in on this day looking to break above this high, which it did, and looking for continuation. It failed to get above that high for a downside reversal on this day. I kind of wanted to see how it reacted from that. Didn't do anything the next day. That was a Monday. And then the day after that, we gapped down below our stop loss and below what I really wanted to use. And that was this 21 level, I think it was. Once it did that, I decided, okay, I'm going to give it 1 day because if I'm swinging something, I don't want to cut too early. I want to give it a little bit of time, especially if we're kind of bullish into the market. But we all were in kind of late stage of the market. So I wanted to give it a day. We gave it that day on Wednesday. It had a downside reversal again, so we got the fuck out. I'm not going to hold through this whole downtrend. I will get back in if it undercuts and it looks good. If it starts having upside reversals on the day, then I might look into it. But right now, I'm not really looking to buy too much. If you look at Bitcoin, yesterday, this was something I noted in stock chat. We had this 3% move in Bitcoin yesterday, but Mara didn't do anything. Mara was actually down 2%. Coinbase was up. It was the only one that was up. It was up 6. But then if you look at Riot, we were down. We were pretty much down yesterday. If you look at BITF, Bitfarm, down 2%. What's the other one? CLSK. These are the three main ones that I look at. CLSK, down 1%. Every Bitcoin miner, every miner or crypto stock was down with Bitcoin going up. So I was like, okay, that's a divergence that I don't really like. So I'm just kind of noting that as well to see how it reacts. All of these, honestly, kind of look like shit to me. Clean spark, bounces back here. It broke below its 50-day moving average today with yesterday. So that's a sell signal. It's probably going to bounce right at this spot here, most likely. Could bounce to somewhere right around 19, 18, but it just looks like it's topping. Same with Mara. Mara's right at its 200 EMA, so it could definitely bounce right here. So like if they're going to bounce right now. Riot looks the worst, but again, if it's going to bounce right the fuck here. Like pretty much right here. And then MSOS we got in right here, I think. One of these 2 days. And we were looking for a continuation. The volume on the weekly was just absolutely phenomenal. I still really like the volume on the weekly, and I really like it. See how we have huge volume coming up, low volume coming down, low volume as it's going sideways, and then again as it starts going up, you have huge volume. That's what you want to see. And now we have actually a downside move on low volume. So it just might need some extra time. I don't fuck around with downside reversals. This was the day I got out. I came up here, got to like 11 or 10, 11 or so, and then just completely gave up the whole move. And so I was just like, I'm out. I think it was minus 20% or 50% or some shit. Wasn't too bad. It's still setting up, but look at how big the volume was here. This is something I note on whenever I'm looking at stocks. Where's my fucking arrow? Right there. Look how the volume on this was larger than the whole volume on this whole move. So that's just something to note. I don't like it when I see that, and that's not something that I want to look too much into. I'll wait and give it some extra time. Nvidia undercut its whole last 2 months of since March lowest level, and then bounced back today. So again, we'll see how this is going to react. If it bounces back from here, you're probably going to see it come back up to this 975. The market could do well. Look at the volume again. Not a big fan of the volume. You are seeing pretty heavy volume, but you do see this little cluster, but it's just kind of drifting down. So, not a great fan of the volume. This looks climactic top-ish, but we'll see how it reacts at this 50-day. That's really what's going to be a main key is these 50-day moving averages. Just like SMCI, not really displacing to the downside right now. Notice we're closing towards the midpoint or even towards the top end of the day. And hold this 50-day moving average coming right up to it. So if it's going to bounce, it's going to bounce right here. And this is another one. If it doesn't bounce, you could see it come down to 750 or so. AMD looks worse than Nvidia, and so that's another thing to note is a lot of these other semiconductors, they still are kind of not looking great. They haven't really bounced with the market the last few days. AMD just kind of literally just about sideways versus if you just look at SPY or the Nasdaq. SPY had a huge upside reversal towards the high end of this the Thursday candle. We're still at the bottom end of the Thursday candle for Nvidia or for AMD. If you look at Nvidia, you're below it even, which shows weakness. SMCI again below it. And so that's just something to note that you're not seeing a rally in the semis with these. Look at AMAT. This one looks better, but look at the volume. Very heavy buy spike, very heavy sell spike volume. What's the other one? AMAT, KLAC. They all look so similar. This one's actually holding well. You're above your 10-day moving average. So some of them are, but they're not seeing too much. I want to see more of a move to the upside with semis to confirm a move for the rest of the market. If the market's going to go up, semis are going to lead it. Silver, we've been talking about this breakout here. it's coming to this $28 level next. That's pretty much the only place where it has to go now. It could consolidate, pull back very shortly, hang out this 27. But all in all, it's coming to this 28.70 level. That's going to be the draw. And then that $30 level. On a monthly and weekly chart, this looks great. I mean, look at this monthly base. Take out any levels here. Above here, can send it here. On a larger time frame, you could look for 35. If gold and silver really decide to go crazy, you could look till 35 on this. That'd be no problem. And that's probably only one standard deviation. Yeah, that's only one standard deviation of this breakout that it's having right now. So if you just do these to the highs, boom, low to the high, normal. It's just like when I do the orb. Just like when we do the orb, we do it from the bottom to the high. We look for one standard deviation. That's the measured move. Quote. When you hear Stan Weinstein wrote it in his book, how to profit in bear and bull markets. He talks about how you take the bottom of the base to the top of the base. You measure that, so 9 points, and then you go up 9 points. That's going to be your quote measured move. That's how where you expect it to go on this breakout. Well, that's one standard deviation. That's all it is. And so instead of doing the measurement in my head and shit, you just go and you do one standard deviation. And so that's right at this 35 level, right where this high is. That's perfect. So you're going to get a little bit of resistance at this 0.5 and then most likely come up to this -1. Very similar to, we just talked about this last week, how I still have them up, your standard deviation marks in gold. We hit our 22.99. That was your half standard deviation. So really, your next target is going to be 2,500. It's huge, but that's what math says. And this is a big breakout. And so I expect these to continue. That's a monthly chart. It doesn't mean it's going to go right up. We could consolidate here, go back, pull back. I would into this fair value gap, hang out, and then come back up. It's not going to happen right away. It's not going to be quick. It usually isn't. Again, I have been putting this to this 2021 or 2009, yeah, this 2009 breakout level. This is what I've been using as a base model. So we see here, we come up, we go crazy to the upside for, how long was this? 56 days, so 8 weeks. What week are we on? I'm gonna have to pause this in 1 second and grab my baby. We're on week 5. So we could continue up for another 3 weeks. This went, let me look at this. That first initial push, when it got above here and went to here. It went 21% in 8 weeks. So we go here, we mop 21%. Tell me it doesn't. Oh my fucking god, it does. That matches perfectly. God, I love fucking statistics. Bro. Bro. It's fucking right there. That's the exact same. That's one standard deviation. That is the exact same move that it made in 2009. Like, I wonder if that was one standard deviation too. That's gonna, put it to here. No, just under. Okay, even cooler. That's definitely something to note. That 21%, that comes right to here. One standard deviation. This is most likely going to be your draw. We're in a huge breakout. It's not going to happen right away, but I mean, this happened in 8 weeks. It was very fast. So I guess we fucking could. It topped out. We were on week 5. 1, 2, 3, 4, 5. Yeah, then it just continued the next 3 weeks. It literally just never looked back. 1 second. I gotta pause this real quick and grab my baby. Okay, so as we were saying, this one standard deviation matches up perfectly with our 2009 template that we have been using. 2009 template is the same. What is this? Almost a 2 year. It's a 581 days, 83 weeks. Ours was actually a little bigger base, which usually they say bigger the base, the larger in space. Ours was much longer. It was a 4 year base. But that same look of pattern, if you just kind of squish it up, it's got that similar look there, right into all-time highs, to your tops. And then we're just looking for standard deviations, just like we do with the orb. Yeah, and so then it moved 21% in this 8 week original period here. Boom. From 1000 to 1225. And so if you take a 21% from the move that we have just had, which is right here, that goes right to our one standard deviation and right to 2500. So a psychological level, one standard deviation, and the previous move of the previous run up that we're using as our template. So I'm going to use this 2500 roughly as a target over the next few weeks. So have its ebbs and flows, but that's probably going to be the draw of what we're looking for. Some stocks, there are a few stocks that look okay. NET being one. It's got a really nice kind of base forming. Broke out into a stage 2 uptrend. Took out this high, which was its strong, yeah, its strong high with this candle. And now we're inside that fair value gap there. So that quantum pivot that Playboy uses, we're at the low end of this range. We did have a huge gap up day and then kind of just been drifting downwards with very, very low volume. It does have earnings soon, so it might be a difficult one. This one seems to just kind of, it didn't do much before earnings, so it may not do much like this right here. It literally didn't do anything until earnings, and then it blasted off. So it could do something like that too. So I'm not in any hurry to grab anything that I'm looking at right now. I'm just kind of noting a lot of things. Dino, this is one that I've been talking about. It's back to what would have been an original entry. I actually didn't grab this, but it hasn't had a nice base, and I still think the draw is back up to here. So if oil tries to continue, then this is going to be a good one that could be. But I don't like this huge candle right here that we had yesterday. So I'm going to be watching to see how it reacts. DT is one that I really like. Not in this yet. It's actually probably going to be here an entry tomorrow if we get a good move with the CPI. The FOMC is the FOMC minutes tomorrow, so I don't think it's going to make a huge difference in trend compared to CPI. So like whatever this direction the CPI is going to go, the FOMC minutes isn't going to do very much to change it too much, in my opinion. But this Dynatrace, I do think it's going to take a little longer. I think might be able to do a good quicker trade up to this 200 EMA to start. And then this was going to be one where it's going to have to, you're going to have to be in and out of it fast, but it's right at its strong high, strong low here. So this low here created this high. So we're back to that low. So this low should get protected. Now that we're starting to pivot above here, if we can hold, this low should be protected here, and even this daily candle. And so what we can do is we can put our stop loss, actually even right there, at that daily candle. That's a 3% stop loss. If we gap up, it'll gap up and it'll fuck this whole trade up. And then you'll be looking, I mean, even to here, that's a shit trade. That's not even a huge place. So you have to even get in at this fair value gap maybe. That would be ideal. Get in at the fair value gap, ride it up to here. That's a 3 to 1. That'd be cool. That'd be ideal. Next, we do have a lot of, and lastly, for sectors and stocks, we have a ton of banks fucking setting up. We have bank earnings here real soon, and banks are setting up. Very nice. So that's going to make kind of a determinant of, is the banks going to really continue or are they going to pull back? Because usually bank earnings tend to pull back. See here, you don't have huge move in bank earnings. This is a 3% up move. This was a 3% down move. So you're averaging about 3%. And so this consolidation after this huge run up, very low volume going right into earnings. This is going to be an interesting setup. If it undercuts and it bounces heavy, it's probably going to end up being a buy and to look to come back up to here. But everything, yeah, take out these highs. If it takes out the highs and undercuts here, then you're looking to continue lower. But if it takes out this low, like even if it takes out this low, what's 3% for where we're at now? 4% is to here. So yeah, don't take out this low. If we come into this order block, so now we have, that'd be cool. And then bounce hard, you'd probably come back up to here. And so that could be something for an after earnings. If they pull back, this could be a trade that we can look into. And that would follows like, okay, is our seasonality going to follow through? Like where we bottom mid-April, like this, have one more push down, bottom mid-April, and then collect and kind of run for the rest of the year, essentially. Pull back again in, well, until September. Pull back again in September, October, bottom in October, run up for November, December. This is the yearly cycle that we have. We have it every year. And so we're just kind of this year has been more of a consolidation. So are we going to get a push or are we just going to pump? Aries, this one the options suck and the volume sucks. I don't like the volume at all. But the pattern is very nice. You're at the 50 day. It's essentially a launch pad pattern is what I call it, where you have all all these three moving averages together just converging and a news day the next day. So essentially they're just getting ready to either to make a move to one way. It's either going to push it to the upside or it's going to make a heavy move to the downside. The volume I don't like. I like how some of these are upside reversal days on these heavy volume here, upside reversal here. But then you have the heaviest volume day as a bigger down day on a downside reversal. Not a good, not a good fan. Doesn't put like a perfect base together. And so those are things that I'm noting as I'm looking at these bases. When I'm trying to look at a base to form, I want WFC is actually really nice. You have a heavy move to the upside, a consolidation, a down move in the volume, where you see a decline in the volume. So an incline in the volume coming up, a decline in the volume as you're consolidating or pulling back. Right here, incline in volume coming up, decline in volume as you're consolidating and pulling back. Yes, you get some spikes, but then all in all, you get a more amount of accumulation days than distribution days. Distribution days are down days heavier than average volume. Accumulation days are up days on heavier than average volume. You're looking to get more accumulation days than distribution days. That's what I'm looking at as a bear mace, as a just a easy way to think of it. And then this Morgan Stanley, again earnings soon, but they have that setup. Really nice equal highs here, a nice high here. We can target kind of a bull flag look if you just kind of take off moving averages, go in like a monthly chart. Just kind of has the look of a bull flag, a heavy move to the upside, then kind of a consolidation draw. Now it's trying to make a higher low than this current low. It undercuts everything, breaks up, trying to make a higher low into that fair value gap. Notice it barely tapped into it, and it could continue higher. So like we're looking at a monthly chart, this looks phenomenal. You have this higher low. Now it can be making a really like a handle quote. A handle would technically be 4 weeks per market school rules, but this could also be considered a high handle on a daily chart with a cup here and then a high handle there. And so, but you do see these upside reversals the last few days. That's very nice to note. And the volume on this down day was not very heavy, was not above average volume. The last above average volume to the downside were very low days. So that's higher volume without very much price movement. And that's something to note showing exhaustion. And so if we break out here, we'd be at least looking to come up to this 101. Again, just one standard deviation of this is very easy and doable, and that'd be 106. And it'll actually probably end, like, most likely it would end up going one standard deviation from this move, which would be at the 120, probably all-time highs, a little above. Yep, just barely above all-time highs. And so that would be, this could even be like a boom, a double bottom break here, and then continue it to the upside. So there's multiple ways you could look at this. And if it, as long as it holds really this low here, this 82, it's looking bullish. That's a 200 EMA. That would get below your 200 EMA. That would get below this higher low here. And yeah. And so if it does get below, like, it's bullish as long as it stays above like 82. And this looks good. And that kind of matches up. Like, you got Morgan Stanley setting up, you got Wells Fargo setting up, you got Schwab setting up, you got Ares setting up. So you have multiple stocks in the same sector that are setting up, and with a possible catalyst being earnings. And so it's like, if they're going to run, earnings could be the thing. Very similar setup. You have this high, these highs here, just took them. Now you have a high handle right above it, and a handle being just a consolidation. It's just an easy way to say a consolidation, high handle. Instead of a like a cup and handle, you would see the handle drifting. This is just a based out handle. There's this is the strong high though, the strong low though. Yeah, the strong high would be up here on a weekly chart, because you don't, this was the lowest point. That high created this lowest point. So we are not above any sort of strong highs. That's the only thing. So we would have to at least maybe magnet to here. So Schwab I don't like as much. I like Morgan Stanley a hell of a lot more. The options are better. And so this is one I think that is looking very nice. So there we go. Oh, and then last chart, these interest rates. These are something that I'm keeping an eye on. Keep an eye on this level right here, which is October 17th highs from 2022, the week of October 17th, 4.3 roughly, 4.34% on the 10-year interest rates, US 10Y. This is a very similar setup to that Morgan Stanley setup I was showing, that I think it was Morgan Stanley, that consolidation and convergence of these moving averages getting ready to move to the upside, similar to this move right here. Convergence of the moving averages getting ready to push it to the upside, just like it kind of did here with this candle and this candle. Sweetie, no thank you. You don't get my mouse. And so if the interest rates continue to the upside, I could easily see there's a fair value gap right here, and then this high. So I could easily see it coming to this 5%, and that would be terrible for the markets, especially if they say, "Oh, we're cutting it, we're cutting rates, we're cutting rates, we're cutting rates," and then you see a heavy move to the upside in rates and a big move to the downside in bonds. That's not going to be good. We did have a good little downside reversal today and yesterday, so, and then this kind of wedging action here. Eat. Okay, baby, 1 second. And so this little bit of wedging action here. So that's something to take, I'm taking note of as well. Very kind of, get rid of those. We have this resistance band here. So that's one, if we can hold above there, then we're going to be coming to this high. If we start rejecting like this and you kind of wedging more, and tomorrow is going to be the day. Tomorrow and Thursday, we have CPI and PPI. Those are going to be the tells of all of this. So yeah, if we hold through this and end up continuing higher, we're going to go to 4.8. even 5%. If we go down, we're gonna come back to this, probably this 3%. Bare minimum the 4. And so that's going to be where we're looking for yield curve and not yield curve for rates. Um, over for that, rates up, market's not going to like it. Market's going to go down. Rates go down, market's going to like it. That's kind of the bear what I'm basing everything a lot of things off of right now. Any questions or tickers anybody would want to see? All right. I appreciate you guys. Apple. Let's look at Apple. Thank you guys for coming. So we got an upside reversal today. Rejected from the 10-day moving average though. Is that 10? Yeah, rejected from the 10, below 50, below 20, below 21. Personally looks like a stage 3 distribution. It's not quite in a downtrend yet until it breaks this low. Or yeah, this low, because that's a strong low that broke this high. Again, you're right at the strong low. If it's going to pivot, it's going to pivot above this level. It needs a pivot. But in order to do that, it's probably going to go sideways some more. So if you're in options, you're probably going to get data burnt. It'll have at least a week or so of options. And that, if it does, that'd be cool. Let it base out, come for a catalyst with earnings, and then that could give it a move to the upside. But it needs to break this 21 day. Is that 21 or 30? That's the 30. 21 or 30, doesn't matter. Until then, for me, notice nothing good happens below it. Nothing good happens below it. You see partial pumps and you see bottoms happen below it. But right now we're not. Every time we take a high, we're getting rejected. We take a high, we're getting rejected. So, all right. Thank you guys. I'm gonna go get some lunch. I appreciate it. Enjoy the rest of your day.